Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours, and that you're having more fun to get more done with getting your sweat on, spending some time with your family. Today, let's look at the Bitcoin breakdown and also the final levels for crypto. These videos have been a follow-on from the previous videos, so if you haven't already, make sure you subscribe with the bell notification icon so you can stay up to date with the timely information that is building upon each individual video. Just the headlines and the quoted titles are not going to give you the full picture, so make sure you are subscribed. If you are finding value from the content and you want to learn a little more about trading and investing full-time, check out the link to the free newsletter. We're going to be posting out a link to our Discord as well, where there's plenty of stuff over there with updates on the videos, the tweets, and also a back catalog of all the previous newsletters that have been published. We also go through the Gann swing indicator and also reviews on the entire courses that we have there. So if you are interested in learning more about the courses, definitely go and subscribe to the free newsletter. Link will be in the top of the video description, and we'll post out the link to the Discord in the coming days. All right, let's first hit it off with Bitcoin and where we currently are. Following on from yesterday's video, Bitcoin bottom is in. I hope people get the point of the quotes. This is the thing that we see all the time. Bitcoin bottom is in. I am not trying to call any sorts of bottom. What I am trying to do is manage my risk and reward in the market by buying low and selling high. Seems pretty damn straightforward, but a lot of people tend to hang out for much lower prices, and then they never come. They start to scramble, get FOMO on the way up, and then start to screw up their own risk reward without a plan. So today, let's follow up from the previous video looking at that bottom and also the Wyckoff accumulation area on Bitcoin. So we're coming back to test this final level here. So the low is at 18,600 just in the last few hours. We've tested that and are trying to close above it. It's still 18 and a half hours to go. We got down to 18,500. So the final levels of support, at least for Bitcoin, are right here at 18 and a half, and the low at 17 and a half. Now, we looked at the accumulation, the Wyckoff schematic here yesterday. Secondary test, that is where we're up to here, coming back to test these lows. We were looking at it around that 19 and a half, but of course the wicks also come all the way down to 18.6. What it says here, if a bottom is to be confirmed, if volume and price spread should be significantly diminished as the market approaches support in the area of the selling climax. So this is the selling climax. Let's throw on some data here. The SC, that's the selling climax. That's the bar on the 18th of June. You got extreme volume, you got a wide ranging bar, you've got a higher close here. So I'm labeling that at this point as the selling climax. So we are coming back to test that area, and that's precisely what the secondary test is about. This can take a fair bit of time, and these secondary tests, after the pumps here in phase B, they can go below the selling climax. These are not exact levels that it has to play out like this, but it's to give you an overall guide of where the selling climaxes, the secondary tests, the spring levels, the next tests can come into play. It doesn't have to do anything exactly, but just to give us an idea of where it goes and then where it comes up to test the next levels. That leads us into the breakout of the accumulation, and that's the only point where we can be confirmed or where we can be far more confident that the breakout is on and the low is in. We get the breakout, the market starts to move away. These periods are also very difficult for our emotions. I know trading should just be black and white, buy now, sell later, but the emotions are basically what makes a winner and a loser. They play on their emotions, they don't have a plan to follow, and it just gets to people, even at the tops. So I'm just looking at the analysis of trading ranges here. Trading ranges are places where the previous trend, up or down, has been halted and there is relative equilibrium between supply and demand. We can say that this has been a halted level of 17.5K. We came up to 25K. This is potentially one of those trading ranges. But you can now see, going back 3 months, the amount of emotion, even in this quiet period compared to the bull market, the emotions are still running reasonably hot and can be quite extreme. To the upside, everyone getting FOMO. To the downside, everyone getting FUD. And it just rinses and repeats throughout the entire range. Shakeouts may also occur once a price advance has started, with rapid downward movement intended to induce retail traders and investors in long positions, basically people who have bought, to sell their shares, crypto in this case, to large operators. And there's no better example than what we saw in the COVID crash of 2020. You can see the extreme example here of the bar just heading straight down, wiping out a lot of stops, a lot of people getting scared, and then the next thing that happens is the market going straight back up from that point. So it did bounce relatively quickly over the next 2 months, but then came to a bit of a sideways with an upwards leaning bias. But if you were in the market at that time, as I was, some of you guys may have been as well, you know that it was still quite uncertain across the board. So what happened in 2022 during this period is that it basically came to a stop in around late April, early May, and then what we felt like was going a little bit sideways with higher lows at that point in time until the breakout in October. So roughly 5 to 6 months in this zone between 8 and 12K before the market was then able to take off from that point. So I bring this up because we could be in those sorts of zones now with Bitcoin should we fall to 16, 14, 13K. If there is a bit of a shakeout, the market is to close higher. That's a good sign that we're coming towards the end. Basically the drop down, close higher, moving away. But the emotions are still going to be quite extreme. You're still going to have a ton of bears saying this thing needs to go much, much further down. We need to revisit 3K or 6K or something crazy like that. But then the market takes off and leaves everyone else behind. While the bears are still hoping for lower prices, some of the people who are unsure are now trying to scramble to get into the market, waiting for a pullback, and basically the rest is history from that point. The market continues up. So the whole game is about risk and reward. What are you prepared to risk in order to get that reward? Are you prepared to risk more time thinking it's going to go further down to 3K, 6K, 10K in order to get a bigger reward? Or are you stacking now and having a pretty solid money management plan so you know where you're putting your orders in order for that next part of the reward to come, and sitting and waiting for the patience of those rewards? This is the total cryptocurrency market cap, looking at final support levels for the overall market caps, which of course is in billions of dollars. The selling climax at this stage is this bar here in June. Low is at $760 billion. Now this other support level comes in at $816 billion. So somewhere around 760 to 820 billion could be that final lower level there if we see a wick. But as I've talked about for many, many months on the channel, I think we're probably going to see somewhere between that 5 and around $760 billion level tested. And so that gives us a first leg down of about 74%. And then from where we currently are, about 34% drop into that zone. If we go to the bottom of it, it's about a 40%. We go to the upper end of it, somewhere around 20%. So I think this is still to come over time for the total cryptocurrency market cap. Now, is it possible to get in that zone of around that 550 up to about 700 billion and still seem reasonable for the rest of the cryptocurrency market? Well, the downside from where we are, we've got a total market cap of 900 billion. If we're to see the downside, that comes out at about a 40% drop, so 550 billion. That would then mean 40% off Bitcoin, ETH, maybe a little more in ETH. Stable coins might not lose as much, but then of course all the other cryptocurrencies. So it is still possible if we were to get that. Say we lost 120 billion off Bitcoin, 60 billion off ETH, the stable coins lose a little more. That would then leave us with approximately 400 between the two here of Bitcoin and ETH, another 100, 150 for stable coins, so that's about another 550. Then throw another 50 to 100 billion on for the altcoins. That leads us to about 600, 650. So it could come in somewhere around this middle level above this zone of the breakout. So this is in November 2020 to underneath the selling climax as a test here. So somewhere I'm thinking around that sort of 600 to 700 billion, maybe with a lower target of about 500 billion. I still don't think it's finished yet. Of course, I'm open to being wrong, but in terms of the total cryptocurrency market cap, that is where I would be positioning it now, somewhere between 500 and 700 billion. In terms of timing, it's not going to be tomorrow. It's not going to be next week. Maybe it's next month. Maybe it's the end of the year. There's obviously ifs and buts through all of this stuff. This has taken a very long time already. November was the peak. We're getting close towards 12 months out. And for the macro view, of course, things need to take a lot longer than the daily look at the analysis, the hours, the days. It takes a lot longer for that. And so far, it has been trending down. The final support here is at 760 to approximately 800, 820 billion. So if that is to hold, bets are off, we start to look to the upside and say, well, that was the lower point there. Of course, we'll continue to update that. But if we start to get that breakdown under 820, this low here, then it's probably looking more likely that we will test the sevens and possibly get into the 600 billion total market cap. And that's going to leave a lot of pain to altcoins and potentially Ethereum, as Ethereum is currently the strongest at the moment. Speaking of ETH, it's currently holding above the 50% level, but not looking that strong leading into this merge, like we've talked about already multiple times on the channel. So if you haven't seen it already, subscribe to the channel, don't miss any of the updates. ETH needs to get above that $2,050 range in order for this merge hype to really continue forward and then attempt to break the bear market downtrend. We're still not even there on the linear scale, which is a little bit easier to cover. ETH against BTC, this was the strong warning the other day. So the update on the macro view for Ethereum is we need to get above 9%. We're just starting to top out here with the volume dropping on the Binance chart. However, there's still 4.5 days to go in this weekly bar, but it really does need to get that move on leading into the merge and then hopefully close as high as possible towards that 9% level versus BTC to see that momentum flow through for ETH and start to accumulate at higher levels. And then the idea here is that it would work towards the flippening of Bitcoin value. As for ADA, this is looking a little bit sickening, but the flip side of sickening is that there are potential much higher prices and higher gains to be had if we're extremely patient. I'll look at the current market action first before I get back to the previous sickening data here. Cardano hard fork here coming up on the 22nd. There's a ton of news out there for ADA, but it is really doing next to nothing on price. Sorry to say for the ADA fanboys out there, but yeah, I've seen a ton of videos, a ton of content about it. It is really trying to pump up the market, or people are trying to talk about it a lot. Price has done next to nothing. You can't dispute price when it's on a chart with buyers and sellers actually telling us what they're doing based on the chart here. Nothing is happening. So I dare say if we get closer to this in the next few days, maybe even it's before the Vassal upgrade happens, of course, if Bitcoin keeps going the way it's going with testing lower prices, then ADA is not going to be in for a very good time. It is closer to its lows than most other cryptocurrencies. And if it breaks down, there's not much support between where it is now at 40 cents down to approximately 16 or 15 cents. Doesn't mean it's going to happen in a straight line overnight once it breaks, but it could lend itself to heading towards that zone between sort of 15 and 25 cents over the coming weeks. So if it does break down, you've probably got a level there between 28 and 38 cents before it starts to continue to test some lower prices. Now, the lowest percentage drop on ADA so far is 87.8, so call it 88% drop. We're going from that low price of about the low here at 38 cents, going down another 30%. That brings us out at about 26 cents. So I'm calling it 30% because we just looked at some of the final support levels for cryptocurrencies overall. If we take a 30-40% drop off our cryptos, then we could expect it to be around that mid-20s. If we go 40% down, approximately from the current prices, let's bring that back there, so 40%, it is at about that 26 cents. So the worst case scenario, if it was to get a spike and it was going to be weaker than everything else, then ADA is probably looking at somewhere in the teens. But going from where we are, about 40% down, is somewhere in the mid-20s. For the strong side, if we get that capitulation, we would want to see the market close back above the previous lows. So this is what's happened in the past. We had a 98% drop on ADA, and this goes for any other cryptocurrency. The sickening part is that it did go down another 36% from those previous lows. So if you're trying to buy the dips always feel the most sickest, in a bad way, to be buying. But the cherry on the cake is that if you see the end of the week, so looking towards the macro picture, you see that higher close. And this lends itself back to the Wyckoff accumulation. You can see the shakeouts may also occur once the price advance has started. So we see that on ADA, price advance has started. We saw it on Bitcoin, we see it on ETH, we see it on everything, right? Then you get this big wick out, this shakedown, which is intended to induce retail traders and investors in long positions to sell their cryptos to large operators. What happened here? Drop down, and you get that big push back up. That's what you want to see as confirmation that that was only just a massive shakeout and then the market is ready to start its accumulation and its climb back out of those lower levels. Solana is also in a precarious position. The downside, 40% from where we currently are, drops us back at about $18, $19, which is those previous levels that we've been covering for many, many weeks now. If we are to break down from $25 to the $26 support level, then that sets us up with the previous lows that happened in May and June of 2021. So we got some price clusters coming together. The data on the chart is all coming together. That's what, at this stage, what I'm expecting for the coming weeks and months in cryptocurrencies should these final support levels break down. You want to stay in touch even more than these videos, go and check out the link in the top of the video description to our newsletter. We'll be sending out a link to Discord. Go and check out the previous newsletters, see how on track everything has been. And of course, as one final reminder, subscribe to the channel, bell notification icon, and like the content up. It does push it in that algorithm. Thanks once again, guys. I hope you're having a fantastic day. I'll see you at the next one. Peace out.